What's up, security token market? We are back again with episode 4 of our 6-part series, Tokenization for Institutions, What You Need to Know, with none other than Arca, of course. The goal of this series is to usher in the tokenization playbook to institutions across the map, as tokenization is one of the more under-the-radar verticals within digital assets to date. Last episode, we discussed company and corporate tokens in addition to other use cases with Jeff Dorman, the CIO of Arca. In this episode, we will be focused on real estate tokenization, joined by Arca Head of Institutional, Annelise Osborne. Welcome back, Annelise. And yeah, good to have you again. So I'm going to introduce myself and then followed by Peter, and then Annelise, please take it from there. So I'm Jonah Schulman, Head of Communications at Security Token Market. We are a leading provider of security token data and research. We track over 200 plus tokenized assets, totaling over 18 billion in secondary market cap. In fact, the market cap was approximately only 1 billion at the start of the year. So it's been amazing to watch the secondary market exponentially rise. If you want to learn more and track these assets and just learn more, head to stm.co.
And I am Peter Gaffney, Head of Research at Security Token Advisors, the consulting arm. And we help clients across the spectrum either tokenize assets or maybe work on the infrastructure side, issue new security token offerings for fundraising purposes, including industries like real estate funds and products, clients in the art industry, pre-IPO shares, private investment funds, kind of anything under the sun there. We work with a lot of industry partners across the tech side, the legal side, implementation, and of course, capital raising partners, which is a great segue right over here into Arca. Annelise, what's going on?
How are you? Thank you, gentlemen, so much for having me. Always a pleasure to be here. I'm Annelise Osborne. I'm with Arca Labs, which is the innovation arm of Arca. Arca is an asset manager based out in California. We're here in New York for Arca Labs, and we're really tasked with helping companies create digital asset strategies. And then also we've created a number of internal products at Arca Labs that we're working with strategic partners to implement outside of Arca.
Very cool. Well said. So I think it's safe to say that, you guys are experts when it comes to tokenization. So, very basic for the viewers who are new to tokenization or just, curious about it. What exactly, in your definition, would tokenization real estate be defined as? And perhaps more importantly, why should people care about it?
I think a lot of people talk about tokenization of real estate. I think there's different ways to look at it as well. So I think it's very difficult if we look at the democratization of commercial real estate, where it's $100 million building and we're going to take that out to retail. Generally, retail doesn't play that large, and institutions generally don't want to mix with retail. And so usually an institution would want to take that down themselves. So I guess what's been done before with some of the real estate tokenizations were generally smaller and less investment grade in nature, I think, so to speak. But there's different ways that it can be done. So if you think about like a GP-LP structure, you can actually tokenize the interests of the LP. So then you're tokenizing, an investment portion. Again, is probably less retail and more institutional. So we're looking at it from a company's perspective. A couple things to think about. Once I worked in the former Soviet Union, and at the time they had given the shares of the main department store to all the employees. And no one could redevelop that, or no one could buy it, because not everyone would sell their assets, because it wasn't necessarily rational why they'd want to hold on to them. And so I think from a democratization or a fractionalization of real estate, I think that can be written into governance. But I don't think the system is broken for real estate. So I do think there's a lot of benefits putting it onto digital assets. I think digital assets can add speed, transparency. I think they can decrease costs. So I think kind of the first step is really just creating the structure as it is today, but using it in a digital format, which would speed transactions. Does that make sense?
Yeah, interesting. No, that's very cool. You used to live in the Soviet Union. So employees had literally, so if I'm working as like the cashier, I would also have a share of that company or of the building.
at the time that had happened yet.
That's right. That's pretty cool.
A long time ago. I'm dating myself, but I do think institutions. I think there's a lot of benefits. As I was kind of starting to say, I think asset managers are doing something for their investors, like for their clients when they're doing this. I think we have, we're working with a number of different companies that are looking to do tokenization in different forms. Not, maybe funds as opposed to direct real estate fractionalization, but it gives your clients the opportunity to trade out, right? And so that gives them more transparency. You could put information on it from a valuation perspective. So I think there are definitely benefits, and I think people want to pay attention to it and not miss the boat. Does that make sense?
Definitely. Yeah. I guess if Peter, unless you have something. I think that's a very interesting point. Yeah, I think there's a lot of different use cases with tokenization of real estate. I've seen a lot of, at least on the secondary market, I don't know if it's kind of like a gimmick, but the St. Regis Aspen Hotel Resort is fractionalized and tokenized and trading on the secondary market. It doesn't have like crazy volume necessarily. You wouldn't think it would, but they are very innovative in the sense that I believe they tokenized 18% of it and sold 18 million to investors around the world. And they utilized a rule called Rule 144, which allows retail investors to trade on the secondary market. So that's pretty cool. Are you not fully with it, or are you not fully within the retail side of things because of the current exemptions in the industry? Because I know with Reg CF, at least in the US, you can only raise up to 5 million. So for real estate, that's not necessarily a whole lot. But with Reg A+, you could do 75 million. And then if you look at INX, what they did, they filed an F1, which is like a foreign company doing an IPO. So they raised 84 million from 7,200 people. So from that perspective, are you saying that you don't think it's viable, or you just don't think it's worth it from the people and the owners of the buildings, I guess?
I don't think the market's there yet. You do an A+, which is 75 million as well, right? So I think it's going to be difficult to raise. A lot of times that people are investing in what they see as digital assets today, there's large volatility, so they're expecting very high gains, right? And so I do think investing in real estate has over time shown to be a very solid investment, but I don't think it's unlikely you're going to have a 50% increase in your value. Whereas I think that's what a lot of people are going for that are actually, taking part in some of these token sales. So, it's a different classification of investor. I think people should absolutely in their portfolios have more stable investments or investments that are backed, that you can cash out of. And these would make them more liquid. So I'm not against the idea of it. And the Aspen coin, that's a great point. So the Aspen coin didn't have as many buyers initially, but it has since traded, and it has absolutely increased the number of buyers and potential out there. So yes, I think we'll develop, and it will be, a broader industry, when we have more flow. Also think about this. So if we did tokenize, if we do tokenize real estate, and this can be from institutional or retail, however, obviously, but think about if we like right now you can buy REITs. REITs have a tax advantage, right? There's depreciation, which is a tax advantage as well for real estate. So, we want to make sure that we have structures that actually that are better in place than we're not losing out on tax benefits. But when you buy REITs, they're, for example, a property type, right? So there's self-service, there's self-storage, there's hotel, there's retail. But what if you believed in Denver, or what if you believed in Houston or wanted to short Houston? And so what you could do is you could actually put together a portfolio of all different properties within one market, right? That's just an example. Or you wanted to do the East Coast or wherever it is. It allows you, the fractionalization would allow you to build your own real estate portfolio. So I'm not against it. I think it's just a little bit early for us to go out to try to raise, I think I brought this up on the call before, the Empire State Building did a REIT, right? They put a number of other properties in it as well. But is it, that's a similar idea, right? To own a share of a trophy property. So no, I'm not against the idea. I think the market's just not ready for it yet.
Yeah, no, I like the devil's advocate approach to, thinking we could just tokenize anything and just raise the capital automatically. Maybe on the institutional side, the real value adds for now are something like codifying the capital stack. If we have like 5 different tranches of financing with different terms, if we could codify that right into smart contracts, into some token offering for each one, probably help on the front end and even back end management. And any distributions or relevant, terms or warrants or perks that are associated with it, that could be the real firepower.
Yeah, no, I absolutely. So I think tokenization can help decrease costs for infrastructure administration. And to your point, if you think about any like PSA or any of these large documents, legal documents, most of them are Excel spreadsheets, who pays when, right? And if you think about the servicing of a lot of these assets, especially kind of in real estate, you can actually, anything you could put in an Excel spreadsheet, you can in essence codify. So you can actually have things paying out, right? So a lot of the servicing can actually already be done with smart securities. So there's definitely benefits there, and on the back end. And I think we'll get there on the front end. Another comment going back to the Aspen St. Regis, it wasn't as hot of a sale in the primary market, but look what it's done in the secondary market, right? And so a lot of people want liquidity, right? Are looking for more investors. And so maybe you don't hit it off on the primary market because people were hesitant. It was the first of its kind. Maybe not everyone felt comfortable in wallets, but on the secondary market, it actually took off. And at that time, we know that there was no secondary market because it hadn't been done before. And so, I think you need both to balance it out. But I think we need to, build the infrastructure and education along the way. And I think we'll get there.
Yeah, and that's kind of a common trend. You see companies closing their primary rounds, maybe from, let's call it even 100 accredited investors. And then suddenly when it's on the secondaries for long enough, you can have like 1,000 token holders. You use 10x your user base right there, investor base, whatever you want to call it. And I think that's kind of the trend we see tokens happening, especially Jonah on the secondary side. Not really vice versa. You're not really starting with 5,000 investors and now ending with 1,000. So I think the expansion, it's kind of like globalization, except of investors in a way. It just, the asset, spreads out a bit more, which is very nice to see.
So I think if you look at private assets, I think that digital assets, right? Digital asset securities can actually really help from a valuation perspective too, right? Because we can actually put information so everyone is privy to the same information, because a lot of times the disconnect with private assets from buyers and sellers. And usually it's that lack of knowledge of he knows something that I don't know, and so I'm going to discount it. So I think that, if we all have access to the same information from a valuation perspective, I think that will help bridge that gap, which will make selling more efficient. And if you look at technologies in the past that have, or new financial structures that have worked, right? Like the mortgage-backed securities market, that decreased the cost of financing because banks weren't holding all the loans on their balance sheet. You were actually selling them off as bonds, and people could choose the risk profile they wanted and the return they wanted. And so that made a big difference to the cost of borrowing. Actually all of structured finance, not just the mortgage market, made a cost. If you look at like what technology did to like high frequency trading, or when NASDAQ came out and everything became digital, I'm a huge believer that digital assets with blockchain will be there as well. It's just a matter of like what we're looking at doing at Arca Labs is really building those out, right? Building out, working with institutions to build out those steps. I believe that we need to go from the institutions down. I think it's hard to go retail up. I think retail has already been able to do crowdfunding, which is questionable. The jury's out on whether that's how successful that is. Obviously, we have Reg CFs and the Jobs Act and different things that have helped along the way with that. We did a study or a survey, and we found that 77% of capital market respondents said they believed assets would be digital or securities would be digital in 5 to 10 years, right? So obviously people see it, it's just a matter of how do we get there? So I feel like that's what we're working on, and real estate's a great security, right? It's proven over time to do well, comp it out to the S&P, and it's generally outperformed, but it depends on the market. If you look at 10 years, I think the S&P outperformed, but if you look at 20 years or 1 year, then real estate outperformed. So, it's a great diversification in your portfolio. Yeah,
well said. I like what you said about working from the institutions down. And to that point, the common practice in the retail market or in retail issuances is to put everything in an SPV, in a special purpose vehicle, and issue tokens on that. So basically, everything's running through an LLC. With that, I mean, it doesn't seem like that would be the go-to model on the institutional level. Obviously, at Arca Labs, you guys spent 2+ years pioneering the blockchain transferred fund model. Would everything, in your opinion, be like under a BTF structure? Or is there some sort of hybrid or something that's more scalable? Because for reference, like let's say we have a lot of issuers that do series LLCs, so maybe they'll file like a master PPM and then just have a bunch of unlimited LLCs under that represent either individual properties or smaller assets. Is there like an institutional version of that you see kind of come into market?
Sure. I guess part of it depends on what you want to do. So I do want to point out that, yes, we are working within regulated structures. And one thing that's questionable from an institution perspective is what are the regulations and where will they go, or what will be regulated later. So we did spend 2 years working for the blockchain transfer fund, the BTF structure, 2 years with the SEC for approval or for acceptance. And that was the idea of what the BTF is really it's a digital, it gives digital shares, but registered digital shares. So it's a registered project or registered securities.
Right.
So it's a bit different because they are registered. So there's the added cost. We're an RIA now with the BTF structure. We put in U.S. Treasuries. You can more or less put in something that's not digital and then issue digital shares of that fund. So from a real estate perspective, I think part of what we're looking at for that is, would it make sense to do real estate shares? Well, what's the REIT? Really, the REIT treatment has better tax treatment, so there's not double taxation. So what is not available today that would make sense using that structure? So we used U.S. Treasuries because we thought it would be beneficial to have, in essence, something that is a NAV of $1 that we can use for collateral and treasury management. So that is, and even repo and securities lending. So I'm not sure quite yet if we put mortgages in it, would it be, but it's not a REMIC structure. So again, we have tax implications. From a SPV structure, most real estate's SPV anyway, because we want it bankruptcy remote. So I think that makes sense to keep that same structure in place, and issue, obviously, if we did the GPLP structure, whatever we're looking at, it makes sense that's bankruptcy remote. From a series LLC, if you're looking at doing a portfolio, right? If you're doing a portfolio, then you want to continue to raise, that makes sense. If you're doing one asset, I'm not sure how one asset is done in a series LLC unless somebody owns it initially and you're selling off different sleeves. It could be done that way. So there's different ways to structure it out depending on what you're looking for.
Yeah, very well said. Those are some great approaches right there.
Absolutely. Yeah, I want to go back a little bit to what we were talking about earlier to, in the sense of like an institution right now, yeah, maybe the market isn't fully there in terms of like the secondary side, but on the primary side of things, like I think similar if you're an institution watching this right now, in my opinion, what I think, you can correct me what you think, Annelise, but I really think what St. Regis did is we've talked about this in the past, like the first early adopters are going to be the most successful because, they took that risk. And I think St. Regis was successful because everyone's heard of Aspen, Colorado. Everyone's heard of St. Regis Aspen. Like St. Regis hotel chain is a 5-star internationally known hotel chain. Aspen's amazing. That worked, like that brand aspect was what really drove, maybe not the primary side, so to speak, because they were only doing a Reg D offering. So, and as I believe, so only credited couldn't get involved. But retail came in because it's well known. So what are your thoughts on that? Because if you're, let's say you're the Empire State Building or you're the Burj Khalifa, I feel like I remember reading somewhere that they were tokenizing. That is the tallest building in the world. That would be really cool. And let's say, the owners need liquidity to expand operations or, take cash, whatever. They could sell 20% of it, probably sell that out pretty well. I know the secondary markets would probably do well just because it's the Burj Khalifa. But I think from that point of view, the market is ready for something like that.
So a couple things. One, I think when you think about investing money, it's from a fiduciary perspective, right? So you're going to have to look at the credit underlying whatever the asset is from an asset backed perspective. Flows are volatile. Of the property types, they're the most volatile because they price every day. And so there is name recognition in the Aspen St. Regis. But I think if I were going to invest into it, I would want to understand the cash flow and how the property is performing. It is flagged, obviously, because it's the St. Regis. Is it going to lose its flag? How long's the management? So there's a lot of different things that would go into me with experience in real estate, looking at it from a credit perspective. So I will say that. So, I don't know the financials of the different properties that you're talking about, but I would want to look at that. I also think from an institutional perspective, one thing that we're trying to work with people on are holding digital assets, because a lot of them haven't done that before. So you can actually offer it optional in a digital assets and then book entry as it normally is done as well. So that's something that can be done. But as digital assets go forward and we recognize really that benefit, we're going to have institutions actually holding them. And there's only a handful that seem to have actually gotten comfortable with having wallets and custody and that sort of thing. Right. So I think that's a step as well. I think there's a lot more transactions in kind of the, in the hedge fund world or in the family office world or the high net worth world, and a little less in the more regulated space. But I do feel, you had mentioned the first movers. So I think there's a cost to innovation. There's a cost to being the first person out there, and someone has to bear the cost. Is it the issuer or the investors? If you're a fiduciary, it's hard to pass it on to the investor because they would buy something of the same credit quality somewhere else, right? So then a lot of that, it seems, would fall on the issuer, unless it's a smaller discount to the investor and they're buying it from a novelty perspective as well. So I do know some companies that are sitting back and figure they'll get in the space after it's already been established. So I'm not really sure about the first. Yeah. I think the companies, from an asset management perspective, or it's seen that you're responding to what your retail investors are looking for, if that's the case, right? If your retail investors want to trade out of an investment, then that's what you're giving them the offer to do. Right? If you think about it, you're kind of paying for an option. If you tokenize a real estate investment, a fund up front, when people invest in it, then they can act, and they gives them the opportunity to trade out instead of holding that to maturity. Because sometimes what happens if your life changes in the next 5 to 10 years and you actually want to liquidate that investment, it's harder to do if it's not digital, or sometimes impossible. So I think, so asset management firms that are kind of on the forefront are thinking about that, and they're offering that to their retail investors or to their investors. And I think that's a huge benefit. So there's different angles, I think, that you can take or think about it than you would think they would for investors, because they're listening to their investors' demands and they're solving that problem. But I do feel like whenever you start something new, there's the cost of technology.
For sure. Yeah, I agree with that. I definitely agree. Like, institutions are definitely, more conservative when it comes to this, for obvious reasons. The definitely goal is like get them comfortable with, as you said, handling a digital asset. At the very least, before you handle a digital asset, observing it is equally as important. You're not just going to be handed a digital security or a piece of a Bitcoin. You're going to be observing it probably for a while, analyze it, make your account, and then invest. I think would be really powerful, and that's exactly what we're doing at Security Token Market, is providing price transparency, and on the primary side and the secondary side, so you can actually see that these are, and we do a very strict vetting process of regulated securities that are traded in different marketplaces around the world. So that is really important. I also really enjoy what Invenium is doing. And I know Peter is very close with Invenium, you're very close with Invenium, so you guys may know a little bit more than me, but they're bringing transparency from all of those, things and aspects that you wouldn't really see unless you were actually involved in the property itself. So all of those aspects are on chain, so you can have a very good tool and transparent valuation mechanism to really see what that property is worth, the cash flow, the credit, everything all on chain. And I think from that point of view, it increases confidence greatly because everything is on chain. And to me, it's inevitable. Like, would you rather blindly invest in something or have to go through this very strict due diligence process that costs a lot of money, takes a lot of time, or you could have one dashboard that plugs in via APIs and updates automatically, programmatically in one place. I know that's what we're, and Venium is, you're bringing transparency to the side. So I think when institutions are more aware of this, then they'll start to feel more comfortable, and then maybe segue them into actually investing in and holding digital assets.
Well, think about, I agree. And think about being able to, like, instead of receiving a quarterly report where you see the value at a quarter and how it's performed for one quarter, you could see day to day, was the rent paid, right? What are the expenses? You will keep you up to date because everything's fed in. And so there's a lot more access to information if you have it in a digital format. And it's reported in. You have to obviously have that information tied into the digital format, but there's a lot more opportunity for clarity and transparency.
Nice. Yeah. So assuming all of that is taken care of, assuming we have properly issued securities, assuming people understand what's going on here, do you see a future? Because I would say yes, easily, but there could be some stipulations that prevent this. Do you see a future where asset managers that maybe are sponsoring an ETF or a mutual fund or some sort of closed-end fund can buy both, let's say, stocks, maybe bonds, fixed income, and security tokens, like tokenized real estate assets in one fund? I always talk about, like, let's say we can make an ETF wrapper that's tokenized, but can we have a traditional ETF that holds security tokens?
I don't see why not. It would just have to be written into, when we look at digital assets, right now, things that are digital are encompassed in digital assets. But I see the world going forward is that our securities will be digital, right? It's not we won't have commercial real estate put in the digital asset bucket. We'll just have it in the real estate investment bucket, right? And so absolutely, I would think it would make sense to incorporate them all together. They're more transparent. They're easier to trade. It would make sense for there not to be a difference, right? And then people would actually prefer digital assets because they're more mainstream and you have more benefits than you have all of the paper, right? Everything signed on paper and being held. So absolutely, I think they would be included.
That's great.
I don't see why they wouldn't. I think it would be, a disservice to your investors, right?
Right.
You would make less competitive.
Right. I was reading a case from like 2 decades ago about a mutual fund manager whose, investment committee was saying, hey, we should buy these real estate assets. And he was like, what, we're real estate managers now? We got to fly to the property, manage our tenants. We don't do that. We're mutual fund sponsors. But in this case, you could really do that. And if this solution was around, it was like a light bulb popping off saying, hey, this solution will be here soon enough. This will be the case where asset managers can actually get some exposure to unique assets that they may normally, not, or they may need a total different strategy or execution team to do.
Well, think about like buying real estate. It was never very liquid, right? It's an illiquid asset because you'd have to go through the sales process to sell it. But you also have, generally when you buy real estate, you do site inspections. If you're buying a smaller share of the real estate, we have so much access to information with the internet, with Google Earth and maps. We can actually drill down and look at the property. You can see, assuming everything's up to date, who's in the property, but you would have updated rent rolls as well. Obviously assuming the sponsor is providing it, but we're talking from, an investment grade perspective. So we anticipate, people are providing information. So it makes it easier, right? Think of the world now with Zoom. We can still find data on another part of the world or country. We should obviously be familiar with it, but you can always trade out of it if you see the market changing. And then think about if somebody is selling something for less than the valuation, right? I think there's a lot of opportunities there, right? I think there's a lot of arbitrage opportunities as well. If someone needs to sell, you can buy it at a discount. It doesn't mean the property has gone down because you would do your own valuation.
Yeah. I think that's a great point. Kind of going back to what I said also and building off what you guys said, it's just like it brings transparency to the valuation. You will, like, similar to a NAV, you'll see what it's valued at, and that creates trading opportunities. It incentivizes people to trade because it actually has a legitimate benchmark. But what I love most, honestly, about it, just in general, is like you have the option. You have optionality to do all these different things. You have the flexibility. to sell when you want. Obviously, there has to be a market for it, but the option of the technology is so powerful, and a potentially illiquid asset for centuries and centuries in human history can actually be liquid for the first time is astonishing. Obviously, we're not fully there, but the technology enables that.
Yeah. It's exciting to see where we can go when you realize the vision, and then it's just the process of getting there, right?
Yeah, I think the low hanging fruit is like the fund level, either interest there, or even Annelise, we were talking earlier in the week about the tenants in common, and if they had like LP interest, essentially tokenizing that, low hanging fruit for some institutions to consider.
Well, yeah, tenant in commons, like the TIC structures, are similar to almost a retail structure, right? And so, honestly, with governance that you could program into the tokens, some people don't like tenant in commons because it is, multiple investors, but 1031 exchanges too. I think we need to think about that from the tax perspective. I don't think I mentioned those before. But yeah, no, it's great to see where we can go and what we can do. It's just one deal at a time, right? One deal at a time and going.
Yep.
You'd mentioned the fund structure. We do have a lot of probably the most conversations are about funds. Some real estate, some non. But I think that's a good step to get there.
Yeah, I think any one of these deals could be marquee deals in the industry, right? Depending on who's involved and what the size of that is. So it's really anyone's for the taking.
And that's why we're in this industry, right? It's a good thing we are. Yeah, I mean, that about wraps it up, unless you guys have any final points. All right, cool. Well, thanks for coming on. Thanks for watching the 4th episode of Tokenization for Institutions, What You Need to Know series. Thanks, Annelise, for coming on, and tune into the YouTube to watch the rest of the episodes, and look forward to next month. Thanks, guys.
Yeah, appreciate it. Take care.